Hello and welcome back to Global Value. In today's video, we're going to be performing a fundamental stock analysis of PepsiCo Inc., ticker symbol PEP. This past week, PepsiCo announced that they were taking an 8.5% stake in Celsius for $550 million, and so that has generated a lot of buzz about the company in the news recently. PepsiCo has also been a long-term duopoly with Coca-Cola in the non-alcoholic beverages segment, and at the time of recording this video, PepsiCo is trading for $174.55 per share. Year to date, their stock price is up about 0.5%, pretty much flat, which is still beating the overall market, which has been down. Over the past year, PepsiCo is up 13%. Going back 5 years, that's about 8.5% compounded annually. Over 10 years, that's 9% compounded annually. And going back prior to the global financial crisis, PepsiCo's stock price has compounded at a rate of 7% per year over the past 17.5 years. Keep in mind that this is not including dividends. Pepsi was also in the news in June because it hit its 50th year of having higher annual consecutive dividend payouts, meaning that PepsiCo is a Dividend King. They've increased their dividend payouts for each of the last 50 years. There are only a handful of publicly traded businesses that have been able to do this. To calculate the total return for PepsiCo, you want to add in their dividend payouts to the 7% compounded annual return. Currently, PepsiCo is paying out about a 2.6% dividend. Pepsi is trading pretty close to its 52-week high. They're a very large snack food and beverage company with a nearly $241 billion market cap. For some more background about the business, PepsiCo is one of the largest food and beverage companies globally. It makes, manufactures, and sells a slew of brands across the beverage and snack categories, including Pepsi, Mountain Dew, Gatorade, Doritos, Lay's, and Ruffles. The firm uses a largely integrated go-to-market model, though it does leverage third-party bottlers, contract manufacturers, and distributors in certain markets. In addition to company-owned trademarks, Pepsi manufactures and distributes other brands through partnerships and joint ventures with companies such as Starbucks. The firm segments its operations into 5 primary geographies, with North America comprising Frito-Lay North America, Quaker Foods North America, and North American Beverages, constituting about 60% of consolidated revenue. PepsiCo was founded in 1898 and is headquartered in Purchase, New York. A fitting name there. For our fundamental analysis, we're going to be performing a modified version of the 8-pillar analysis popularized by Everything Money, taking a look at 8 key financial metrics of PepsiCo as a business to come to a holistic and beginning understanding of the company based on those fundamentals. So let's get right into it. Starting off with pillar number 1, we want their average PE over the past 5 years to be below 22.5. Currently, Pepsi is trading for 26 times earnings. Over this time frame, they've traded at an average of about 25.5 times earnings, although that is skewed by what looks to be a very low PE ratio during 2019. So overall, they were trading for a higher multiple than this, likely somewhere in the low 30s. So this is going to be an X to start off here on pillar number 1. Next up for pillar number 2, we want their average 5-year return on capital to be above 9%. Over the course of decades, over the long run, a stock is going to return approximately what its underlying business returns, and these underlying business returns are captured here by return on capital. Pepsi earns pretty stable returns on capital. Over this time frame, their returns on capital haven't had that much deviation, and overall, they return about 19% on capital in an average year. So that's double that 9% metric we're looking for, and this is going to be our first check here on pillar number 2. Pillar number 3, we're looking for 5-year revenue growth. Pepsi has grown revenues from $63 billion in 2017 up to $79 billion in 2021. Another check here on pillar number 3. Pillar number 4, we're looking for 5-year net income growth. Here again, Pepsi has grown net incomes from $4.8 billion in 2017 up to $7.6 billion in 2021. This is another check here. Here we can also note that in 2018 they had an atypical year for net incomes. This is something you potentially want to learn more about if you're interested in the business, but they had more money flowing through their earnings in 2018 than in these other years. They could have done a number of different things that year to get this result, including selling off a business unit. So this higher net income was why their PE was slightly skewed during that time frame. Next up, for pillar number 5, we're looking for decreasing shares outstanding. When you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. When a business repurchases shares and buys back stock, they're decreasing the number of shares outstanding, which increases your ownership percentage in that business, ultimately increasing the percentage of the business's profits that you're going to be entitled to without you having to spend a dime. So we want companies that are buying back stock when their businesses are reasonably valued, and it's a prudent capital allocation move. Pepsi has slightly bought back shares over this time frame. They've decreased their shares outstanding by about 3.5% through their share buybacks. So this is a good thing for existing owners of the business. If you had been a long-term shareholder of Pepsi and had held it over the past 5 years, you now own 3.5% more of the business without you having to spend any money at all and without you having to make any new share purchases. This is going to be another check on pillar number 5. So far through 5 pillars, we've got 4 checks. Let's keep going. Next up, pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures. It's this column here in green. Free cash flow is the lifeblood of any business and can be used to pay dividends, buy back shares, pay down debt, make acquisitions, or reinvest back into the business. A business's abilities to produce free cash flows, now and until Judgment Day, discounted back by some reasonable interest rate, is ultimately what that business is going to be worth. So in 2017, Pepsi had about $7 billion of free cash flow, and that stayed pretty much flat over this time frame, although it is down slightly in 2021. Even though it's approximately flat, this is going to be an X on pillar number 6. In an average year over this time frame, Pepsi is earning about $6.4 billion of free cash flow. So we'll use that number in pillar 7 and 8 coming up here. For pillar number 7, we want their net debt, which is long and short-term liabilities minus cash and short-term cash equivalents, to be below their average 5-year free cash flow multiplied by 5. So as of the end of last year, Pepsi had about $36 billion in net debt, and when we multiply their average free cash flow of $6.4 billion times 5, so this is going to be an X on pillar number 7 as well. Pepsi is utilizing quite a bit of debt in their business. However, for such a fundamental and ingrained business like Pepsi, with their huge distribution network of food and beverages, this higher level of debt is likely not as concerning as if we would have seen it on another business. And that's just going to be given the overall nature of Pepsi's business, their brand strength, and their overall distribution network. It would be very difficult for this business to go away anytime soon. Then finally, the big pillar of them all, pillar number 8, we want Pepsi's market cap to be below their average 5-year free cash flow multiplied by 20 to give us a starting point for a reasonable valuation of the business. So Pepsi currently has a market cap of about $241 billion. When we multiply their average 5-year free cash flow of $6.4 billion times 20, that only brings us to $128 billion. So we are quite a ways off here, off by more than $112 billion. So this is going to be an X on pillar number 8. If a 5% average free cash flow yield is reasonable for this business, then we're not seeing any margin of safety here in their current stock price. Then Pepsi is a newly crowned Dividend King, again meaning that they've increased their dividend payouts for each of the past 50 years. Here we're looking at their dividend profile. So people make mistakes all the time by blindly chasing dividend yield or blindly chasing these dividend titles, such as Dividend King or Dividend Aristocrat, without taking a look at the underlying health and sustainability of that dividend overall. If a business's dividend payouts are part of our consideration for investing in a business, we want to make sure that those dividends are healthy and supported by the business's abilities to produce free cash flows. So in this case with Pepsi, Pepsi is cutting it pretty darn close. They have a very high dividend payout ratio compared to some of the other dividend aristocrats and dividend kings that we've looked at. And most years they have about an 80 to a 90% dividend payout ratio. And so they're paying out the vast majority of their cash flows as dividends. Overall, this just means that in a potentially down year, it's going to be harder for PepsiCo to continue growing their dividends. And ideally here, we'd like to see a larger gap between their cash flows per share and the dividends that they're paying out. Typically for businesses that have some sort of runway left in them, we would only want them to be paying out about 60% of their cash flows as dividends. And Pepsi is paying out quite a bit above that in most of these years. This is something to be aware of if you're thinking about PepsiCo because they're a dividend king. So in summary, PepsiCo checks the box on 4 out of 8 pillars. Pepsi is a newly crowned dividend king. However, based on their abilities to produce average free cash flows, the business is looking richly priced. They're utilizing more debt in the business than we necessarily want them to. And even though their revenues and net incomes are up over the past 5 years, their cash flows are actually down, although they're pretty much flat. Pepsi has slightly bought back shares over this time frame, and they earn above average returns on capital at about 19% returns on capital in an average year. Then we found out that they're paying quite a bit of their cash flows out as dividends, and they have a pretty high dividend payout ratio overall. Pepsi is quite an established and ingrained business. It's a duopoly with Coca-Cola for non-alcoholic beverages worldwide. Pepsi is also part of Terry Smith's Fundsmith portfolio. Terry Smith has been referred to as the English Warren Buffett and has a penchant for investing in very high-quality businesses. Pepsi appears to be a high-quality business given the overall nature of their business. However, some of their fundamental financial metrics could use some work. So this type of analysis is a holistic and beginning understanding of PepsiCo. It is not financial advice, and it's not a buy or sell recommendation of the business. What this analysis is really doing is determining whether it's worth your while to do further due diligence and learn more about the business. As a value investor, you want to understand a company inside and out as if you owned 100% of it and you understand the business's essential essence before making any sort of investment decision. You should also talk with the proper professionals before making any investment move. So with that said, that's it for today's fundamental stock analysis of PepsiCo Inc., ticker symbol PEP. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Pepsi with me, and have a great day.